Hello, everybody, and welcome back to my YouTube channel. Welcome back to the podcast. Today, we have a very special guest. Chris Prefontaine, who is a well-known real estate investment coach in the United States, is joining us here today. Welcome, Chris. So nice to have you on board, man.
Thanks, Randy. I appreciate it. And I always like hanging out with people that have been seasoned in the biz.
Well, I think I might be pretty well seasoned by this point. Yeah, we were just chatting briefly before we started here that you've been in the business over 30 years and I'm at 28. So
Close enough.
we definitely have some experiences that we
Yeah.
could share for sure. So I'm just going to tell the listeners a little bit about yourself.
Sure.
Chris is actually the founder, the CEO, and he is a coach at a company called Smart Real Estate Coach, which is based in Newport, Rhode Island. And Chris is also an author of several best-selling books, including Real Estate on Your Terms, The New Rules of Real Estate Investing, and Sell with Authority for Real Estate Investors. He's also founder of the Wicked Smart Companies, and he's host of a very well-known podcast in the US called Smart Real Estate Coach Podcast. And I'm going to add to that, you also have an excellent YouTube channel, and we're going to put links to that channel underneath
Thank you.
YouTube here, no problem, and also on the podcast. So what do you want to talk about today, sir?
I'll go in any direction you think your listeners can benefit from. You and I were talking a little bit about the market. So
Right.
whatever you want to hit first, we got a lot we could talk about.
Yes. Okay. Well, maybe we should back up a little bit for the benefit of our listeners here. Most of the people listening in, I think, know that this year has been kind of a change or a pivot in the real estate market in North America, not just North America, the US and Canada, but also in most of the Western countries in Europe and Australia, places like that. I think it's fair to say that most of our real estate markets have been pretty much on fire over the last little while. Certainly in Toronto, which is Canada's largest metro area, we've been on a tear for like 10 to 15 years now, where prices were just going up, 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 up. Yeah. And interest rates were super low. Of course, the pandemic came along and governments all over the West decided to reduce their rates almost to zero to keep the economies afloat, I guess, during the pandemic. And so I don't know whether that was good or not, but they printed a lot of money, gave out a lot of cash to people and to companies. And then lo and behold, at the beginning of this year, the central banks of both the US and Canada discovered that there's inflation out there. And this, I guess, was a big surprise. So central banks all over the place started raising interest rates. And we just talked a minute ago that actually, as of today, the rates have gone up 7 times in Canada. And I think it's probably about the same in the US, is it?
It is.
Okay.
Yep.
So we've got a massive increase in rates. Mortgage rates have gone through the roof. We were looking at less than 2% 9 months ago. And now we are looking at 4.5 or 5.5 to 6% as of today. So that's a massive increase. The market has slowed down. We got our November numbers out just the other day, and year over year sales in the Toronto area were actually down 49%. So nearly 50% drop in sales year over year. Prices are down about 20%. But we're still looking at really high prices here. I don't know about in your part of the world, but I'm assuming prices are pretty high there as well.
Yeah, they're starting to correct. So there's so many similarities. That's why I always generalize with North America like you were, because you were saying in your low, you were kind of like just under 2. We were just under 3. Right now, you're hitting 5.5, 6. We're hitting 6.5, 7. It's very, very proportionate with what our markets are doing right now. So as I said to you, Randy, I'll share just a quick stat and see where we want to go with this.
Sure.
And I know it's similar, just proportionally, maybe a little lower in your area. And that is, it's the third time in 50 years that we have an affordability, I won't say a crisis, but a challenge.
Yeah.
And so here's the cool thing about creative financing, which we're in. Okay, if it's already an affordability issue and we haven't hit our 50-year average, what's going to happen when it does? You and I both know these rates aren't high. They're high compared to the last 2 years, but they're not high in general. My first house was, I don't know, 8%. And then my next one was 10%. Like these aren't high.
You're right. Mine was 14.5%.
There you go.
First house I bought.
So I'm like, okay, but I am a realist too, so I know that's going on in the economy. And then our 50-year average, I don't know about yours, is 7.7, right? So we got those two things going on, and as a result, the sellers now that weren't calling us back 7 months ago are calling us back by the droves, because they're buyers 7 months ago who thought they were buying hundreds of thousands of them across North America can't buy now. Oh, they think they can. They can with creative finance, but they can't conventionally. Crazy.
Okay, that's interesting comment. Um, at the same time here in the Toronto area and in pretty much all of Canada, there's a shortage of listings too. What we found is, I think the prices are down about 20%, but they could be more. A lot of sellers have decided to just wait. A lot of them are thinking, well, rates are up, but they're probably going to go down next year. I don't know if they will or not, but they might. And they're saying, well, we've got tons of equity. We'd like to move, but we don't have to move. And so we've got to actually, I believe I heard yesterday, it was a 22-year low in listings. So there's very little inventory. Buyers are sitting on the sides. Sellers are holding back till next spring, maybe. And so everything's kind of at a standstill. It's just outrageous. And so there we are. But I happen to believe also that we're going to have a rough winter. I think it's going to be tough for real estate. But I also believe, in terms of investment potential, that eventually, once rates flatten out, they're going to plateau probably for a little while. And then once they start to fall again, which could be any time, it could be next summer, it could be 2024, we don't really know. I think you're going to see the markets pop everywhere because there's a lot of pent-up demand. In Canada also, we have a ton of immigration coming in here right now. It's basically an open door policy where we have this year, including Ukrainian refugees, I believe there's supposed to be 700,000 people being admitted to Canada this year. And this is our numbers here are like 34 million. So it's a huge jump in population, which they haven't really coordinated because there's nowhere for them to live. So we're also finding rental rates are through the roof. Right now, to rent a 2-bedroom apartment is about $2,600 a month in the Toronto area. So if you're an investor and you happen to own a condo, you can make some pretty good money. But right now, everybody's afraid that prices are going to go down. I shouldn't buy today. It could be 100,000 less 6 months from now. So everybody's holding back. That's where we're at. Other than that, everything's perfect. What can I say?
Everything you said is the exact same here. There are so many cool things to do as an investor, or if you're in the corporate world, if you want to move on the side of the we help people escape their job. We call it all the time. Right. This is a great time. I don't think in my 31 years, so our same years, I don't think I've seen it this advantageous for the niche of creative financing because of all that banking stuff you just said.
You're so right. And I was having a conversation with somebody a couple of days ago. They were going, well, it was great back in January and February when, everything was rocking and rolling, but we had so many multiple offers back then. So, every listing that came out, there'd be like 10 offers on it, and places were going 100,000, 200,000 over the asking price. That's not a great time to buy. That's not a good time to be buying. Now, when there are no more multiple offers, there's no more bidding wars. Now might be a more reasonable time to buy. But again, everybody is just step back, it seems. They step back and they're waiting to see where the dust is going to fall. And so that's sort of where we're at. Now, I'm going to turn it over to you. I tend to ramble on all the time.
No, I won't ramble. This conversation is good because here's what I'd say about the comment you just made. The reason, I think, one of the reasons the buyers are waiting, even though you and I both know that they'd be better off buying now when there's less demand, less competition, is the media is screaming. They always do scream. And quite frankly, here's something for everybody to think about. Do the masses, do people in general achieve high level? Do they get up every day and do whatever it takes to accomplish all their goals, no matter what it takes? No. Do they listen to the media? Yes. So when they're doing that, I encourage you to go the other direction. That's when fortunes are created. That's when Joe Kennedy back in the Depression made a fortune around here because he went the opposite direction. That was a depression. We're not even remotely in that state. Right. But that's an example of what to do. Go the opposite direction. Be the 2%. And if you don't know how to, then get people that have been through it. Myself, Randy, there's people that have been through cycles and they know how to navigate that. Right. And that's what I do on a daily basis with people all over North America.
So that's what we should definitely talk about today. I think that's a hot item for everybody. They're wondering what should we do next. They've got the money. Maybe they're investors and they've got some cash that they'd like to invest. They'd love to do it, but they're just holding back because they need a little more comfort or a little more confidence that things are not going to get worse, that they're going to get better eventually, and that whatever they're going to do today is going to pay off tomorrow.
For those people you just said have money on the sidelines, because I'm sure there's listeners that are in that mode. There's also probably listeners that were in the mode I was after the crash, like I don't have money or credit, like I can't do that. Okay. So to both of them, I'd say this, that you don't save your money. The way we buy real estate, we don't sign on bank debt and we don't use our money. And that's simply, that was re-engineered out of the crash I went through in 2008. So in the US. So I hope you do have money on the sidelines, but if you don't let that stop you because you don't need it. And if you have it on the sidelines, squirrel it away and learn how to buy real estate without it, and you'll feel much better. Trust me.
Okay, tell me more.
All right, so
yep.
There's 3 ways we buy. Only 3 ways we buy, and that is owner financing or vendor take back.
VTB, right?
The same stuff. Subject to existing financing, where I buy someone's property, the loan stays in their name, but I own their property. And then there's lease purchase. And we have students in Canada, and you can focus on any one of those. Frankly, you can make a fortune on just the vendor financing. We, in particular, look for another niche within that, though, Randy. We look for owners that might have like a second home, and they might live out of the area, or they're still maybe in Canada, but they live away from their main, the property that I find that's say a second home or an investment property. So I look for free and clear. I look for mortgage-free properties, and then what we call absentee owners, they live somewhere else. That's a great list. And about a third of the properties in U.S., I don't know the exact stats, so I won't missay it. But in the U.S., it's a third. It's going to be close to that. In Canada, are free and clear.
Oh, yeah.
Great list to talk about.
Yeah. Something like that. Exactly. And we also have a lot of absentee owners for sure.
That's a great combo right there. Great combo to talk to.
Okay.
Especially all right. So with the COVID and everything else,
Okay. So let's say somebody's aware of an absentee owner that owns, let's say, a condo. There's a lot of condominiums in Toronto, a lot of high rises. And they live somewhere, maybe they've retired to the US, they're living in Florida, or maybe they're living in China. We don't even know.
Yeah, it doesn't matter, right?
How do you track down those people? I mean, we have abilities to find their name and address. You guys have a lot more transparency in the US, where you can find somebody pretty easily if you need to find them. It's a little bit harder in Canada. We have these squirrely privacy laws.
I do realize that. I found that out by working with some of our students. So there's 2 things that come to mind. You said you can get name and address on some, and then realtors usually can get a little bit more data. So you gotta lock arms with someone that can. And mailings are okay if you can get some of that data. But in the US, we just literally a database. We can click a button. So
it's phenomenal.
You can be in Canada and like literally do some stuff in the US if you want to do that. But you can get a hold of those lists. They're more difficult.
So what's a typical conversation if you track someone down? You give them a call. What would you say to them about selling their property potentially?
Sure. So I'll give you some nuggets on that. Good question. Sure. And then let me preempt that with, we have virtual assistants who do that initial call. Not that you can, but I can make it more efficient for you. So you're not doing that. But the conversation is like this. If they're just a free and clear list that you bought and you don't know what their status is,
right?
Especially with what's going on, my conversation or my script is something on the lines of, "Hey, Randy, we buy homes in the area. And with all the craziness in the market, we're just seeing if you're looking to sell now or in the future." And it's that simple of a conversation. Or we're looking to buy in your area, or we're looking, for a team member or a family member. It doesn't matter. It depends on what your situation is. It's a very easy conversation. Okay. If it's no, great. And now or the future. And then if it's no, do you know anyone else that might be, because we're looking for homes? Now that's the spread, because sellers aren't selling like they were, like you and I said 90 days ago. They're just not.
Right.
So it gives us an opportunity to get in a lot of doors. It's a simple script, but we teach it.
That reminds me of, I used to be a Mike Ferry guy. I'm sure you've heard of Mike Ferry, the real estate
I was
coach.
too.
Were you? Yes.
Yeah.
So back in the day, man, back in the 90s, I was door knocking. I was working FSBOs and expireds, and I used the Ferry scripts. And you know what? They worked.
What years were you with Mike? I'm curious.
I think, I started in the industry full-time in 94, and I got introduced to him that year, but I think it was 96 pretty much. So
you and I were there at the same time then. So
no way.
Because he started his one-on-one training. There's a point to this.
Right.
He started his one-on-one training in the room, and he said, "I'm just doing this for an experiment." And I joined, and then I met, you must know, Richard Robbins in Canada.
Of course. Yeah.
Rich and I were in the same group, and then I went to work for Rich in 2000 for a few years and coached.
That's funny, man.
Small world.
Well, he's created a large coaching program as well.
Yes.
And he's done really well with that.
Yeah,
nice guy. So I've met him. He's a great guy.
We run in the same circles.
Oh my goodness. A small world, Chris. Okay. So it's a script, and basically you ask them if they want to sell. I mean, that's beautiful. And you have virtual assistants that can do that for you.
Yeah, they do. So that I'm talking to the cream. I mean, I don't do a lot of the calls now. I've duplicated myself a few times. My son-in-law joined me and duplicated me, and then he got some seller acquisition, as we call it in the team. But yes, you'd have someone do that, and then I'd teach you how to kind of scale that so you can get yourself out of the mix eventually.
Okay. So if someone said, yeah, we're considering it, we'd like to sell possibly, then you would schedule an appointment, and then that you would, the person would go and meet with them and do the CMA, that kind of stuff, give them some ideas.
Yeah, we'll do some comps. I care less about comps. I want to know, but I don't go too deep because when they're free and clear, Randy, what I structure, this will be an eye opener, I think, for a lot of people. Okay. We don't mind giving them their price. Now, that's going to surprise some people as an investor. Okay. As long as we get long enough terms, 5, 10 years, because we're structuring principal only payments. So if I buy your house for $700,000 and I'm going to pay you $2,000 a month, I'm using round numbers. That's principal. So every year I'm getting $24,000 down in principal versus an interest rate that's inverse to that relationship. That's super powerful for how we exit our properties.
Very sorry, I'm a little older. Sometimes it takes me a little while to wrap my head around these things.
Okay. Yeah. So
go ahead.
I'll give you a simple deal, a very simple deal. Okay. We bought a home, nice home. We bought a home on the water in a resort area here, and it's on a bluff overlooking the ocean. Beautiful. Believe it or not, because you're from the old days with me with realtors, she was a realtor from Boston. She couldn't sell it. Okay. But also, on top of not being able to sell it conventionally for the number she wanted, she could have sold it. Right. $945,000 we bought it for. She had a mother-in-law with her that was ill. And so there was some nuances there that the open market didn't want to accommodate. And we said, I don't care. Stay in the house for this long, whatever you want to do. We structured $945 purchase price. Unlike most deals where we put no money down if we pay top price, we did pay like $8,500 down, but it was a $945,000 house. We broke the mold there a little bit. Right. And then we paid $2,500 a month, principal only. That deal has since cashed out, but that deal went 4.5 years with that kind of principal pay down, $30,000 a year came off the principal.
And she saw the potential of that the minute you explained it to her, especially having.
She wanted a couple things. She wanted the tax benefit of not getting hit right away. She wanted the flexibility of her mother-in-law or mom, I forget which one, in the house with her for a few months. No conventional buyer would do that. Right. And then she wanted the top price that the market wasn't giving her. We gave her that as long as we got principal only.
I've actually never heard of that. Man, right? I'm feeling bad here. 28 years in the business. I never heard of that. That's a great idea.
That's primarily what, in the owner financing world anyway, if I had my way and I could find all the deals like that, but about a third of our deals are done like that, but that's a lot because here's a metric for you. This will be, again, I hope an eye opener for everybody because 3 metrics I'll give you. Okay. If you can find a home for $200,000 or more that has no mortgage on it, in other words, you're buying it for $200,000 or more, and you can structure at least a 4-year term, which we did on that house. Okay. And you can structure a monthly principal payment of at least $950. You have, with our 3 payday system, a 6-figure profit deal in 4 years.
Okay. Explain to me the 3 payday. What's that?
Yeah.
What is that?
So that house, stay with that house. The house that we did, we exit all the homes, almost all the homes, without getting too advanced, with what we call rent to own. Works phenomenally well in Canada as well. Okay. And what that means is there are buyers out there, to our earlier conversation, right, that can't get financing right now. They could 7 months ago, but they can't now. That's right. They need to save up more money for down payment, or they need to clean up their affairs in some shape, form, or fashion. They need time. That's all they need, time. They're good buyers. Okay. Not all of them, but a lot of them are good buyers. So they come in with a down payment for this house, even though they can't get a mortgage yet, and we put them in that home under a rent-to-own program. That first down payment they make is non-refundable to us. That's payday 1. Okay, payday 2,
so if they change their mind or they default in any way, they move out in the middle of the night, you keep the down payment.
Correct. Yeah, okay. So you're not dealing with tenants. You're dealing with honest buyer, honest the wrong word, deserving buyers that just can't get a loan yet. And you know that because we do a check system. Okay. Then payday 2, we are paying something in that oceanfront home. It was $2,500, and we collected from the buyer. I think it was $38. That delta is ours. That's payday 2 every month. Now that's a big one. Usually it's closer to $300 spread, but that was a nice one because it's higher end. Okay. And then just for disclosure, and then third payday is really cool. Take that big house. Third payday is we bought that for $945. We mocked up to 1.2 because you're giving terms. There's no haggling. They want in. They have no other way to do this. And then we had $30,000 a year in principal pay down. There's a large profit spread there from the principal pay down and the markup. That's payday 3.
I'm all ears. No, that's another good one. A very interesting concept. I mean, we do have rent to own here quite a bit, but that's a little bit of a spin on that. I like that.
Yeah. Yeah, so we trademarked that federally, and it works well. And you know what that was born from, Randy? It was born from after the crash. There were like a few things that I just said, okay, I'm never doing that again because you and I have been around long enough.
Yeah.
So one of them was banks, and because I'm not pledging my assets anymore. And the second was I'm not getting paid once anymore. Like you were in those days where we would sell a house. That was spinning plates, as you remember. Like
Yes.
in my peak with my friend, I was doing 100 homes a year. But that's also, I
That's
get
a
to
lot.
January and went, oh, I got to do that again.
Right.
So
Right. And you burn
the
out
three
eventually.
paydays,
You
you
burn
don't
out
get that.
eventually. Okay, I'm making notes here, Chris. I'm making notes.
Good,
Okay,
good.
that's very interesting. Okay, so the 3 paydays. Keep going. Tell me more. Tell me more.
So, well, which direction do you want to take this? Because I can go into I can go in any direction you want. You tell me what's going to be most useful for the
Well,
audience.
again, we don't want to get too technical, but just
Yeah.
I think today our goal should probably be just to give the audience some ideas of some of the possibilities that are out there. That
Okay.
it's not all doom and gloom. There's ways to get into this market. If
Yeah.
you have a down payment, great. If you don't have a down payment, there are other ways to do it.
Let me say this then. Most of those deals are no money down. Like I made the exception to that big one, but most are no money
Right.
down.
Yeah.
And the other way we buy, I said, was lease purchase. We have literally Canadian agreements specific for these. They're a little different there, but they operate the same way. In
Okay.
the agreement for a lease purchase, there's a $10 deposit built in. $10.
$10.
The best story of recent is Brian in Chicago, who came. He was an elevator salesman, literally never in real estate.
Okay.
And Brian came and within 9 months left his job. That's why we focus on people like that that have good salaries, but they just want out. They're done with flying and corporate. And he did his first 8 deals, Randy, all with our lease purchase agreements, all with $10 down, all 3 paydays on those 8 deals, just over 800 grand. I think it was like 838. So now he didn't get all that today, remember. They're all over the next 3 or 4 years. But still, he amassed almost $1 million with no experience, but then our training, but with no prior experience, and built a nice business. So if you're new and or sort of afraid's not the word, but cautious of I don't want to take title yet, or I don't want to go through any, I want to lower my risk. Lease purchase is the way to go because the owner maintains ownership. You just put that under your control with a lease purchase agreement. But $10, that's an infinite return almost with the 3 payday system.
So, and you've got the paperwork that's drawn up that would give you that controlling interest.
I literally just
legally,
again, because we came from the broker world. There's a gentleman that flew from Canada, Matthew, to our event in the Rhode Island here in September. Mm-hmm. And he came up to me at the end. He hung out. I didn't even know who it was. He was in a suit. He's a nice guy. He owns a big brokerage there. I didn't know this till the end of the event. And he said, I want to do this aggressively. He's in Quebec. Okay. So I sent him all the Canadian agreements we had because we were just looking for someone more aggressive to really take it to the next level there. And he's in the program. And I would suspect that that's going to blow up that area in a very positive fashion and empower a lot of investors. Again, he's in Quebec, different area, but the agreements originated in Toronto, actually, from one of my friends.
Okay. Do you do like online webinars? Do you do some training online where people could tune in? And I know you got a ton of videos on YouTube, but
yeah, most of it is. I'm glad you said YouTube a few times. I should have pieced this together. So YouTube is because I want, as you saw, there's a ton of deals. There's like 150 deals there.
Yep.
We expose because I'd rather have people go, hey, Chris, I got your material for free. I watched the videos for free. This is something I want to pursue. Great. Now I have someone that did some due diligence on their own time.
Right.
Instead of trying to sell them something, cram it down their throat, and they're like, oh, you know, this isn't for me. I'd rather not go that route. So you have at the end of the show, make sure I there's a link I did for just your listeners. They can get my books for free instead of going to Amazon. And that way they get to play around. They go on YouTube. And then I'll give you a free hour class so they can sit through an hour class. And if after that you're interested, great. Then you give us a buzz. It's simple, but all of it's online. Even the weekly calls, if you're in the program, are on Zoom. Very, very easy to plug in. We only do 2 live events a year. We're back to live finally.
Oh, great.
And we do 2 of those a year. And that's how that guy, Matthew, met us.
Yeah, we do. Well, even today, we're on Zoom today. It's like a new part of my life. If somebody 3 years
still
ago,
nonstop. Yeah,
it is. Yeah, it is. Less interaction, but I'm hoping that we're almost done with COVID. Although who knows what's going on?
Who knows this winter, right?
I know. And you read every time you read the news, it's it's like, oh, it's spiking in LA or it's spiking in England or
some other new thing.
Right. Some new variety or something. So who knows? In the meantime, real estate is a constant, though. People have to live somewhere. And, I've looked at many times we've looked around. Where is the best place to invest? I often say this story that I've never met a person, maybe it's just me, but I've never met a person who got rich and wealthy through the stock market ever, ever. In my maybe I'm not. No, if you're working downtown New York on Wall Street or something, you might meet tons of them. But where I am, even in Toronto, where there's a big financial center, I've never met people who say, "Well, I became a multimillionaire on the stock market." But I have met many, many, many people who have gotten extremely wealthy through real estate. Extremely, just ordinary people, just ordinary people.
I agree.
Yep.
I'm sure there's some good traders on for listeners, but
right.
The fact is the stock can in theory go to zero.
Oh yeah.
I don't care what happens to the market, it's not going to zero. Your property is not going to zero.
I'll tell you, if you know you're going to choose between cryptocurrency or Bitcoin and buying a house, do the math. You don't even
going anywhere.
You don't have to think about it. Exactly. So these techniques, I guess, they would work for all kinds of housing. We're talking about residential here, not commercial. I don't do a whole lot of commercial stuff, but I guess it would work with any kind of real estate.
Very good point. Yes, because so I teach single family residential for one reason. There's a lot of shiny objects. If you're teaching, let's say you're in a room, you gotta stay focused for that time till you learn it. But in theory, do they run into multis? My office building, I bought on terms from a guy who owed nothing, just like I just taught. So yes, any asset class whatsoever, Andy. This has been around since 1600. It's not like it's new. They did it before banking. It's just becoming more mainstream now. You can literally buy, and people do, planes and boats on owner financing. It's not different. It's always been there. You just got to understand the skill set. But once you learn the skill set, think about it, you have it for life. So if you were working with us for a year or 3 or 5, it doesn't matter. You have that for life. You can go do your own property that way. That's the beauty of it.
Okay. So what would you tell to what would you say to somebody today, again, with the backdrop of we are in kind of a pivot point in real estate? It's probably going to stay soft. For the next, my own personal feeling is about a year at least before we're going to see any kind of turnaround. Whatever it is, if it's 6 months or a year or 2 years, who knows? What would you say to a potential investor today? Should they jump in? Should they hold back? Should they do more due diligence, or should they just start doing it? What advice would you give them?
I would tell everybody to go the creative route. I'm biased, but let's take that off the table and say, for everybody coming into real estate, 3 simple things.
Okay.
1, find a niche that you can get behind that's been tested, market tested.
Right.
Like pre-COVID, during COVID, after COVID, we thrived. So it was built that way. So whatever niche you pick, but I can tell you creative financing will thrive. 2nd, find someone in the niche like you and I that have been around long enough to have seen and gone through some cycles. Because if you're seeking someone out and they haven't done that yet, what are you going to do when the market turns like it is right now?
That is so true. And I meet a lot of young realtors who've been in the business a year or two, and they just don't know what to do. They've never seen anything like this. They're used to, you put a sign on the lawn on Monday. Yeah, exactly. Monday, there's 10 offers. You take the highest one, it's done. And now they're saying, what are we going to do? So, okay, man, we're on the same wavelength there for sure.
So on that 2nd step, I know you agree with this because you've been in programs like me. When you find that group or persons, just make sure you align with them in other reasons than business too, because you and I both know people, probably part of that whole program we were in, that were successful, but they messed their life up during it. That's not success. So be careful when you latch on to someone or a group. And the 3rd one's the hardest. So out of the 3 steps, because the 3rd one is, okay, you did that. Now put the blinders on for at least 3 years. When I had Brian Tracy on my show, and I'm sure you know that name, he said, no, it's 7 years. But I always used to say 3 years. He said 7 years of blinders because he said, he was on my show like 2 years ago. I think he was 82. He said, look, I've been broke, I've been very successful. It takes 3 years you're just getting past the suck mode. And then the next 2 or 3 years, you're getting pretty good. In the last 2 or 3, that's when you're going to hit it. He said by the 7th year, then you'll have a fortune. If you stop before that, it's too early. Until then, I was saying 3 years. But whatever you like, it's 3 to 7 years for that 3rd step with that person you found in step 2 in the niche you found in step 1. That's what I would say to anyone. And yes, now I would do it now. Okay.
So yeah. And yes, folks, if you're listening in here, real estate is not a sprint. It is a marathon. It takes time. Whichever investment vehicle you're using, whatever you're doing in real estate, it doesn't happen overnight.
Right.
And that's another thing I find with younger people today. They expect instant results. It just doesn't happen. It takes a little while.
You just brought up the biggest challenge. Thank you. That I see. It's mismanaging expectations. because unfortunately, I know you know this too. People are good marketers online. We're not good marketers. We know how to get deals done, but there's people that just know how to market. So they're going to get you to buy their program. And guess what? Then they're not there. And it's not like it's not their business model. Their business model is to sell you something and move on. I spoke to a gentleman, I had him on my podcast, Randy. I won't say his name.
Okay.
But he said to me off air, I said, hey, what do you do with your coaching clients? He said, coaching clients? He said, Chris, I know how to market. I sell $20 million of product per year. I don't care or know or want to coach. And I said, well, we should talk because I would be able to coach them. He said, no, I don't want to get involved in it.
That's,
oh my God.
Yeah.
So we're the opposite. Like, go
There's,
do your free deal diligence. If you're ready, we'll go do deals.
Right. Well, that's so true. There are a lot of courses out there, and you find out later that the guy never worked in real estate, or they
did 30 years ago.
Or yeah, back in the 70s or something.
Late.
Exactly. Yeah. No, that is so true. So yeah, you're right. Young agents need some coaching, and people and the coaches that they work with need to have experience in the real world, of real estate. So what's your website? I know I looked at it. It was great. There's tons of information on there.
Yeah. Thank you. Let's give them the link that's geared just for your show for us, just so I don't forget. It's wickedsmartbooks.com/Randy. That'll tell me that it came from Randy's show, and we'll get you out a package, and it won't be, put $8 on a credit card to ship. We'll ship it. It's for free. And we'll get you a couple of the best-selling books out of the 4. The basic ones I think you should put in your hands for the next year. Okay. And then
that's great. Great offer.
Yeah, no, thank you. And then I put a master's class together that I do offer to people on the shows. It's free. It's an hour. It's just at smartrealestatecoach.com/masters class. Those things will tell you, do I want this niche or not? And your decision's okay.
That sounds irresistible. Why wouldn't you want that? I mean,
that's my hope for the new year, right? Why not try it?
Good for you. That's fantastic, man. It really is. So, well, you got my head spinning here. I'm thinking about a couple of the different approaches you're taking, and they're definitely, I can see that they're well thought through, and I can see that they're working. You must have a ton of students by now.
We have a lot of students that have gone through the basic program, and then the more sort of, I'll say, serious and committed ones join the program where we do deals together, because that's the fastest way to learn. I don't care what industry you're in. If you can do it hands-on, you're gonna, it's faster. So yeah, jump in, look at what we got going on, and hopefully we'll be talking soon.
Yeah, well, it's been wonderful talking to you today, Chris, and you're welcome to come back anytime.
You ask, and I'll be there.
From one salesperson to another, we can't. It's irresistible. What can I say? No, seriously, it was a pleasure today. Thank you. There you go, folks. So I'm going to put all that contact information underneath the YouTube video, and also on the podcast, which is syndicated out to all the major podcast hosts. And once again, thanks, Chris. It's a real pleasure having you on board today.
You bet. Great to hang out. Thank you.
Okay. Have a great day, and we'll talk again soon.
You too.
Okay. Bye.